Hey, good day, everybody. Jeffrey Beamer here, Senior Investment Strategist over at ewotrader.com. Welcome to our Delta Neutral Show today. We have a lot going on today. We're going to look at, first, we're going to look at a past trade, a trade that we set up for you last week. Then we're going to talk about some headlines, market-moving headlines, updates, looking ahead, and another trade for this week. So if you like this content and like what we're showing each and every week, please like and share, and we will give more to you. So let's jump right in and take a look at our trade from last week. This was on Goldman Sachs, and we are looking for stocks as they go through, in this case, an earnings event, and we're looking for a stock that just doesn't really move very much. Now, it can gap and it can move around, but just within a certain range. And that is exactly what happened. As you look at the chart here, you'll notice the lower light blue line on the chart, the horizontal light blue line. Last Friday, Goldman gapped down and actually tested our lower break even in this particular trade. But as we go into earnings, we are looking for really, being a financial company, a pop in some direction. And sure enough, it popped right back up into the channel. We were taking profits off earlier today. We were around $90 of off of our 120, meaning the 121, the $1.21, that it was our maximum credit that we took in for the trade. We could have captured 90%, or excuse me, 90 cents of that 121 today. Or if you are a trader that has a little bit more patience and we're still in the trade, the trade is still up $62 off of our maximum win of 121. That is right now about 60 basis points on portfolio. Remember, we're using this on a hypothetical $10,000 account. And if you just stay in this trade expires this Friday. And as long as Goldman stays between these break evens, we could earn about 1.2% on portfolio in just a week and a half, or really two trading weeks would be the duration for that. So you could take profits now and get about 50% of your maximum reward, or you could be a little patient and take a little bit more. All right, so another good trade, but we are now heading into earnings season. Let's look at some of the top headlines, and we'll get to earnings here in just a moment. Stocks started the day really nicely up, but they have erased their earlier gains as bond yields rise, and really some underpinnings of the economics of our economy are becoming more of a concern. All right. So stocks rise, and then we have some independent stocks like Trump Media. Shares are lower there after they registered documents with the SEC saying they wanted to sell millions of more shares of stock. Market didn't like that. Shares sold off. Also, Tesla made the news today with layoffs. They announced originally about 10% of their workforce, but in some departments, it's reported by Reuters, that it could be up to 20% in some divisions of Tesla. And shares are lower. They're lower about by 5%. And as I mentioned, then earnings are this week. There's not much on the economic front, but boy, do we have a slew of earnings announcements this week with some big names coming up. So that is where we're headed. All right. So let's jump over and look at the charts and get right into it, because as I mentioned, markets are selling off, and we are considerably lower on Spider. Considering we've dropped about 1.5%. I would estimate, just off where I saw markets trading earlier today. Although we're down 95 basis points after on Friday's move, you can see this big red candle here, and really the sell-off is in force. Now, we set some targets for this. I left the blue arrow on because this was a pretty significant day. We popped with conviction out of the channel. All right, so that was our first sell signal. Okay, and then as we went on, we had a crossover of a shorter term moving average over I would call it two short-term moving averages crossing over. The blue that you can see here is the 10-week moving average or 10 period, and the red or orange here is the 21 period moving average. We did have a cross last Friday. That was our confirmation of a sell-off, and then today, we're getting this continued down move. Now, I would say the downward target, the first target for a move is about right here at 495, where my crosshairs are. But as you can see, there's not really any major support until we get down to around major support would be right around here, around 475 level. Okay, and that is a bit of a pullback, and it's not necessarily breaking the bullish trend, but we are in a territory where we will be selling off, and I would not be surprised if we break 500. But our first target here is below 500. It's at 495. When we get there, we'll reassess. But that is one of the reasons for that is that is a level of a retracement on the move on this big move here. If we pull up our little technical tools here, you'll see this 38% fib retracement off of this big move here is around that 495 level. So we will monitor that, and really the same goes for for everything else. Now, one thing I do like to do is I do like to put on my Hike and a She candles, and this also confirms the trend. We can also see some confirmation candles here that happened before this move to where we would go bearish. Really, I would say Wednesday of last week, if we were using Hike and a She, where was the trigger day. Okay, and now we just have these candles dropping down. So let's go back to our regular candles. Let's take a look at the Qs. All right, the NASDAQ, same thing here. We're down 150 basis points or 1.5% today. We are breaking support. When I wrote the notes here, we were at support, but we have sold off. And my target here is 420 to the downside. That's my first target, is 420 to the downside. And I would say that could happen before May. All right. If you're one thing about option traders is that we have to calculate time and price. Okay. Where regular analysts just pick a price and they just throw it out there and say, I think it'll go down to 420. And rarely do they give a date. But I think by the end of April, we could definitely be down there at 420. And we could actually be there this week if it really sells off, if the momentum picks up. Okay, jumping over to the small caps and the Russell, same thing here. Boy, look at that. When we gapped, really the sell trigger date was Friday. All right, with confirmation when we gapped down and out of the upward sloping channel here, we got the first signal date of a sell-off, and then Thursday we had a little rally, but Friday was the confirmation candle. And again, if we put on Hike and a She, we'll be able to see this a little better. You can really see that yes, Friday was the trigger date because we needed confirmation, and we got that on Friday. So now, where are we going? I have 190 as our target. That is down just above this long-term moving average. And it is this pivot point that you do see back here. This is, let me just put this little arrow on. All right. So we have this little pivot point right here is the next target to the downside. And once we get there, we'll reassess and put out new projections. And that could happen again before May. All right. These sell-offs occur, and they market drops a lot faster than it rises. So this could happen pretty quickly. But I do have that 190 as my initial target. here, and then we'll reassess at that time. Now, jumping ship and going over to some of the commodities, let's look at USO. We're pausing here. Interesting on USO is that we are beginning to form a little, like a little pennant. Sorry, I don't want that tool. Let's get that off of there. I am looking for there. Here it is. All right. Let's just go sideways here, and we're looking at this little pennant or flag that is starting to form. We'll go sideways. We broke out of the pennant back here. Okay, now we're forming this flag. We're pausing up here at $80. I do feel that we're going to go to 100. Now, if we do with crude oil, will we go above 100 on WTI? I think that's a little bit more challenging, but we could easily see 85 on USO as we march up towards that $100 level. But crude is taking a little breather today. USO is down about 32 basis points. All right. But it is forming this little flag pattern, which is bullish. Now let's move on to the metals here, gold and silver. First, we'll take a look at gold. It's up about 1% today. Friday had a little bit of volatility, but today the trend is continuing in place. Lots of people, believe it or not, are actually selling into this rally. I don't know if that's really a good idea. Well, it's never a bad idea to take profits. All right, if you bought gold at 185 and you want to sell at 220, well, that's a nice trade. That's a nice you want to take your profits. But in light of everything else, especially inflation wise, this is not a bad place to be. Let's put on those hike in the sheet candles once again. You can see actually we got a little red candle forming today. That's because of what happened Friday, that volatility. But I would suspect that with any type of follow through tomorrow, this will all turn green again. We're holding above that 10-period moving average. You can see that we're popping right off of that. Let me go back to our regular candles. All right, you can see that the wick here touched our 10 period, and that's actually more of a 10-day. Sorry, that's why I want to call it a 10-period moving average, because we're using daily chart here. We bounced right off of it, and now we're beginning to rally once again. Silver, though, is the outperforming gold as on this most recent rally. It's up over almost 2.5% today. It did have that bit of volatility on Friday, but today, a big move. And you can see how far we are trading away from that 10-period moving average. We would like to see these two kind of meet and take a breather. It could indeed, this $26 level is proving to be somewhat of a challenge here. You can see the red line that I have as a long-term area of resistance, and that is off of these, triple top that we had back here in 2020, and again in 2021. That 6-month period, we tried 3 times to penetrate this 26 and a quarter, 26 half level, and we are trying it again. That is significant resistance, and we need to get on the ball and move up, up above there. Now, bonds. Let's go over to the long end of the curve. We're going to talk about TLT, which is the iShares 20-year Treasury bond ETF, TLT. I drew this down arrow some time ago, actually about 2 weeks ago, and we are following right through it. I just left that down arrow on, and down we go. So long-term rates are significantly higher. This means 10-year is up above 4.5%. Last I checked, it was like 4.62, I believe, was the print on the 10-year. And this is pretty significant as markets are trying, there are certain forces in effect that are trying to get the yields higher on the long end of the curve. Because we have been inverted for so long, over 18 months, we have been inverted where short-term yields are significantly higher than long-term yields. And they're really trying to flatten that curve for a variety of reasons. All right. Now, where do we think this is going? I still think this is, down is probably the best. Unfortunately, we're looking at headed down, and boy, these lows back here last October, there's still a ways to go to get down there. But I think that's our target. If we were to pick a target right now, is definitely kind of around that $85 level on TLT. Now let's look at the short end of the curve. This would be SHY. This is the 1 to 3 year Treasury bond ETF. And notice here we have a green candle today. Okay, we did gap lower. Now we're starting to rally. And again, where TLT is down about 1.8%, SHY is only, down 7 basis points. It's pretty much flat. And this, again, is the kind of market forces in effect that are short-term rates are paused, long-term rates are rising. This is going to flatten the curve. All right. And if we go to our chart that I've been showing each week, you'll see this happening. Okay. If we look at the 3-month versus the 10-year, which is what the Fed looks at, this inverted yield curve is beginning to flatten. Now, last week, we were about 1.04% to the downside, inverted, okay, which is well above our lows. And this is as of last Friday, okay, we were at 95 basis points. This will spike up again today, all right, on this reading. And again, we're headed towards that flattened yield curve, trying to get those long-term rates up above the short-term rates. Okay, so that's the trend right now. Now, and this is having all sorts of effects across all different markets, because if we look at mortgages, you're going to see a significant spike in the average 30-year mortgage. We were hovering right around 7% last week. In fact, we were at 7.1% on a national average last week, and now we are at 7.8, I believe, 7.88. We're up about 34 basis points, which is a sharp move higher, approaching that 7.5% move in just 1 week. A 50 basis point move in the bond market, like on 30-year mortgages, is significant in a short period of time like this. So we are really seeing some volatility in markets as a whole. So really what's happening is a lot of forces are at work, and now we are headed into earnings season. And boy, I mentioned last week that earnings season would kick off on Friday, meaning last Friday, with some of the big banks like JP Morgan, et cetera. Several banks, Citi, all had earnings. And now let's fast forward to this week. You saw Goldman Sachs. We're working with that trade. We took that trade off for a nice little profit. That was this morning. M&T Bank was this morning. First Bank is after the market close today. But then look at you can pause this video and just take a close look. There is all sorts of industries. We have Bank of America and Morgan Stanley tomorrow morning. We have United Airlines after the close tomorrow. Then Wednesday is really the big day. Lots of names anticipated. Thursday is also full of big names. We have Nokia, Comerica, D.R. Horton in the morning. And then after the market close on Thursday, you have Netflix. And really, those are some of the key players this week. And then finally, we close out the week on Friday with American Express, Regions Bank, and a couple of other names on Friday. But we're getting into the early part of the heavy earnings season, and there are lots of names here that could be potential market movers. All right, so we want to kind of, you know,
and
pay attention to what's happening, especially if you have investments. If you have long-term investments, that's one thing. But if you are a trader, that's a totally different type of trading, and you want to be aware of what's happening around you and make adjustments accordingly. All right. So with this earnings cycle, we are, over the past couple of weeks, we have been focused on stocks that are had earnings events, but just weren't going to move very much. We've been very successful at those. Okay, just taking in premium, stock going through that earnings event, collecting that premium when the stock just doesn't move. And now we are getting into some names that do move big through earnings. And we're going to focus on that this week. All right. So if we take a look at our trade for this week, we are going to look at Discover Financial. And this would be a breakout trade. So unlike Goldman Sachs, which we looked at last week and then talked about just a little while ago, we were looking for that to consolidate. There was some volatility, but for the most part, it was right. It did what we wanted it to do. Now on Discover Financial, we are looking for a kind of a big move, and you can see the stock that it does move around different announcements, different corporate actions. All right, this has earnings on the 17th, which is Wednesday after market close. And I'm looking at just a little strangle here. The debit's going to be around $525 or so to do this little strangle. And we're looking for that stock to really move through its earnings announcement. Now, we've talked about how to do this several times, and I do have a free handout for you. It's a little ebook available at ewotrader.com /straddle. And you can learn how we trade these breakout type of moves. And we're going to be seeing a lot more of these as we get into earnings season. So now we combine these two strategies where some stocks, hey, historically they don't move. We're gonna take trades on those, and we're also going to take these trades on these potential breakout movers. So hope we'll take a look and see what happens with Discover next week. Hope you enjoyed today's quick little roundup. Have a great trading week, and I'll see you again soon. Take care.
and 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 and